Good evening, traders. Welcome to our session today. My name is Matthew. Today we'll be doing supply and demand zones. So the areas of focus today will be the key terms in supply and demand. Then you also look at supply zone and demand zone structures, the factors to consider for high probability supply and demand zones. And then number 3, we look at the risk reward potential of demand and supply market structures. Then we check at a few examples on the charts and we move on to take the questions. So the key terms that you'll find in supply and demand concept is, what is supply zone itself? This is where the price levels is where the sellers find the price levels, where the sellers find price levels to enter short positions in huge volumes. At the same levels where you have the traders exiting long positions or booking profits for their buy positions or long positions. You realize that supply zones creates, whenever you have a supply zone, it creates resistance levels. Okay, so for the demand zone is where buyers find opportunities to enter the market in big volumes. Buyers means entering long positions, and then at the same demand zone, then you find the traders are exiting short positions or liquidating or closing the positions that they had for the short positions or the sell positions. So whenever you have a demand zone, then it creates support. Then we'll also find extended range candles, ERCs. This is where you have a candle taking more than 80%, where you have the candle body taking more than 80% of the whole structure. But the base candles is where you have a candlestick whereby if you look at the wick or the tail, it's more than 50% or half of the entire candlestick. Hey Apollo, I see your question. Was that a little bit? I had a little bit of technical challenges. That's why we have started a little bit late, but we'll cover much of the ground. So no worries. So these are the terms that you're likely to find when you're dealing with supply and demand levels. So let's look at the supply zone structure. So whenever you're talking about a supply zone, then this is the kind of structure you're looking into. And there are two approaches to a supply zone. Supply zone basically is where you're looking to sell. So you'll find a situation where you have a rally, then the price gets into a base. And here you can find the base candlestick that we have there. You have a candlestick which has got a very long wick and a very small body. The wick is taking more than 80% of the whole candlestick. And then after that, you have a very strong drop. So that level creates a supply zone where you find on the second point, when the price touched that level, it exited from that point with a very big move. And let me try to mark that area that I'm talking about. Just hold on. After this base, then you can find on the second point, you have the price exiting that level with a very big move downwards. So this is a supply level. Anytime the price is hitting this area, it's just pulling off that area with a very strong move. So this is where you have a rally, then you have a base, then a drop. Okay, you realize that a base area will create a resistance. Sorry, not a base area. A supply zone creates a resistance. This area or this level is a resistance level, but it's being created by the supply zone, which you find here. So the next example is where you have a drop, then you have a base, then another drop. So at this point is where we're going to utilize the concept of, let me just delete these ones first. This is where you're going to use the concept of what I had talked previously about the extended range candlesticks. So extended range candlesticks is where you have a body taking more than 80%. The extended range candlesticks, you'll find them at the point where you have this drop, base, drop. So initially you had, what this one means, initially you had a very strong downward move. After the strong downward move, then somewhere at the middle, you have a candlestick. Can either be a base candlestick, or it can be a very big extended range candlesticks. So in this case, we had a base here, and then once the price pulled back again to that level, we had a strong push downwards. So these are the two scenarios where you're able to identify supply zones where you're going to find opportunities to sell. Now, let's look at the demand zone structures. The demand zone structure is where you have simply the demand is where you have interest to buy. And in this case, also looking at the same concept of drop, then we have a base, then we have a rally. In this case, the base will create an opportunity for, or will create a supply zone that later becomes a support. So in this case, let's look at this situation where we had a drop, just like you can see. Then after this drop, we had a base. And this base is being created by this candlestick here, which has got a very long wick or very long tail. And it's a base candlestick because now you've got more than 80% of the whole candlestick structure being taken, or more than 50% of the candlestick structure being taken by the wick, right? So this zone, if you just extend this level, you realize that the price went back again to that level, and on hitting that level, we had a very strong move to the upside, right? This is what we are calling the demand zone. We have a very strong buy or strong buyers coming in at this point. The other kind of a structure you can find for the demand zone is where you have the price pushing up. We have a rally. At some point, you have an extended range candlestick, which is later engulfed. Then at this point, you realize that the price touched that level again and then went up. So this is an example of a rally. Then you have a base. Then the price comes back again to that level, which is now becoming a demand zone. Let me write DD to represent demand. The price went up again. You realize that even on the last part or the last bit of it, there was a strong rally. Then we have one candlestick. This one is an extended range candlestick where we have the wicks taking more than 80 or taking more than 50% of the whole candlestick structure, and the price, once it tapped on that one, on the second candlestick here, the price kept on rallying. So this is an example of a demand zone structure. So with those examples now, let me move you next to the factors to consider for high probability supply and demand zones. So what you have to consider is the strength of the bearish or bullish candlesticks which are getting out of that zone. So what this one means is once you have identified this zone, for example, this level here as your demand zone, then what you need to check for is once the price goes back again to that point, do you have candlesticks exiting that point very fast, or do you have consolidation? So a high probability one is where you have the price getting in and exiting very fast. Like you can see here, we had one initiation candlestick, then the next one went off that level. This one is a good indication that that one is actually validating that demand zone. Looking on to the second case where you have rally-based rally, of course, look at that supply, that demand zone which was created. The price just touched that point and then pulled off. So first actually giving us a wick, and this indication of it just gives you a high probability demand zone for entry. That's what it means on the first bullet point we have here. Number two, look at the number of candlesticks on the zone. Of course, if it's exiting, if you have got few number of candlesticks getting out of that zone, then you have a very strong zone to count on. Number of times the zone is tested. So the fewer the number of times that zone is tested, the higher, the more potent it is to give you a good move. Risk to reward potential, we will look at it on the next slide, where if you're looking at a supply zone and the likely target is not as big, then that supply zone you will consider it weak. Considering the first case here from the left, we have a very big target zone. As we're moving forward to the right, then we've got a smaller target zone. And then on the extreme right, we have a very small target zone. That one shows you that signal won't be a strong one. You're actually having a small reward to the risk which you're targeting. That's not the best one to have. I'm looking on the chat and I see you have got several questions. I will be able to respond to your questions once I've covered the next one slide. So the demand zone is where you're preparing to buy, where there are strong interest to buy. Now, the risk to reward potential that we're looking into is still the same case like for supply zones. Do you have a very big target such that are you going to get a big reward to cover the risk just in case you enter that trade? So the more the target zone decreases, then of course the less potent it is, right? And let me look into the examples. As I'm going to the examples, then I'm looking at the questions here. Patrick is saying, hey Patrick, you're from you're a student in Kitalian Institute, interested in trading. All right, yeah, so welcome. And of course, we're here to mentor you. So follow these sessions. We have them on Mondays and Wednesdays, and you get the level of mentorship that you want. Keep engaged to us, keep speaking to your account manager. And if you're able to attend to our physical sessions as well, you're very much welcome. And Edward Gond is asking, where in the FX Beta portal you can get info on the, you're talking about market info releases. I think you're talking about the economic calendar. So once you go to your portal, what you need to look at is check on the left side of your account, and on that menu, look at the analysis section. On the analysis section, you will find several tools there. You find Signal Center, you find technical newsletter, then you will have economic calendar as well. And not only economic calendar that you will see, you will as well see the corporate calendar, right? Now, let me take you now straight to the chart, and we look at the supply and demand zones we are talking about. Now, we're looking at Euro Swiss, and we look at the Euro Swiss. I want us to identify the supply zone we had here. So the concept you're getting here is a rally base drop. And in this case, let me show you those. Let me show you. Wanting to use an arrow, I don't know whether I'll find it. Yeah, so in this case, this is where we have a rally. Then at this point here, we have a base. Let me indicate it using, let me use a shape to indicate it. This forms the base. And then after this base, I have another move down. So rally, base, drop. Where do I find it? It's here. we have the drop. So right at the base, this is where I'm going to look for supply levels or supply zone. So in this case, I will need to look at the base candle or the candlestick which has got the characteristics of either an extended range, although for the extended range, you will find it mostly on the continuation of the trend, either rally, base rally, or drop, base drop. So in this case, we're talking about a rally, and then we have this base, then there is a drop. So here we're likely to find a base candle, which is a candle with a very long wick, taking more than 50%. Now let me zoom into this part. Let me zoom into that part, and we see whether we can identify that candlestick. And right here on this part which I have marked, I can see we had a candlestick that has got a very long wick and a small tail. I don't know whether we can see it. Right at the top here, I can zoom more so we can see. We have this pin bar. That is the base candlestick. So if I choose to extend those levels, that channel to the right, and we want to see what actually happened when the price hit that level. So if I extend that channel, you will realize that that supply zone was actually a valid one, because in the second case, I want to highlight this part. I will use, let me use an ellipse. So at this part here, that part which I have put in a circle, you realize the characteristics we were looking for, because the first thing is where the price is, look left. Once you look left, look at the structure of a rally, like you've seen the case here. Do you have a rally? And then we have a base where the price is pivoting or reversing, and then we have a downward move or a drop. So at that point where the price was dropping, look for specific candlesticks. Once you look at those specific candlesticks, then it's all about checking whether at the point where you are, that's where I've put a circle at that level. So do you see the price exiting that point very fast? And it turned to be a supply zone. The price dropped very fast, and this was some very good pips. Looking at the 1 hour candlestick, 1 hour time frame, it went all the way to around 50 pips. That was a nice one. And this supply zone now created a level of resistance where the price came in again. How many times? Let me try to see. Price came in here again several times. Like this is the second time. This one worked perfectly, right? And on the third time as well, it worked on the third time. If you can check that point, let me try to resize these circles a little bit. So this one is a supply zone. Supply zone where you have interest to sell. And on the third time, actually not that time, the fourth time, still it's turning into a supply zone. But now this is where the idea of, if you can remember very well in the presentation, let me actually put it up again, where I was talking about factors to consider for high probability supply and demand zones. The number of times the zone is tested. The fewer the number of times that zone is tested, the more potent it is. Otherwise, if it gets tested twice, thrice, more than 3 times, then there's a high likelihood of that level being violated. So the most fresh touch on that demand zone or supply level If you can get it, then you've got a high probability, you're likely to have a high probability setup for that supply or demand. Like in this case, if I try to move, or you try to look at that scenarios I was talking about, this was the point where I've marked is where we first of all noted that supply zone, then check on the second level or second point, or the first time that we're getting this, the touch here, boom, came up very nice, around 50 pips. Those other instances or those other times it reached there actually did have a very big move. So the most initial ones will give you good entries. So this is a case of a supply, right? And as well, it is turning into a resistance level. It's something you can keep watch of. So in doing the supply and demand levels, you're trying to catch the very initial stages of that supply zone so that you can get a very fast move and a big move. Then later you can use it as a support or resistance level where you still be trading the price bouncing off that level. Let me try and find an example for demand. So I'm looking at the market watch. So we can scan several together. All right, and here I'm looking at New Zealand yen. With the New Zealand yen, let's look at the scenario of rally, base, rally, and came up perfectly, created a very good demand zone here. This is what I'm talking about. I'm talking about this rally. Let me use an arrow here. We go to the objects, then go to the lines. I get an arrow. So I'm talking about this rally up to this point. All right. That was a rally. Then I'm getting some sort of a base at this point. So when you see these several candlesticks here, if you go to a higher time frame, you're likely to see that this is like one single candlestick. Let's try and see on what happened. It's not there, but on daily, this is some sort of a base, and then after that, we had another rally to the upside. If you keep on looking at that concept, you realize there was a base at the top, and then we already got a supply zone. But based on this concept here, we have a rally, base, rally. So with this base which was created, it gave us a demand zone. I want us to mark this level, and this time round, I'm going to use an object. I'm going to use a rectangle. On the shapes, a rectangle, I want to mark off that zone, and then I move it ahead, or I just drag it, actually extrapolate it or drag it to the right. And looking at this level here, see how the price pulled back again to the same zone and reversed. So this one here was some sort of a demand zone. Sorry, demand is where you have interest to buy. Let me insert. So click insert, go to the objects. I'm using MT5, by the way. Go to the shapes. I get an ellipse, and I want to mark this area for you so you can see this is what we're talking about. This point here, right? So what are the characteristics of these candlesticks that are going to help you? Look at how the candlesticks get into this zone and exit very fast. So this one is a characteristics of a high potential or a high probability demand zone. The price exited, and with some attempt to come and get the orders filled here again, it went all the way high, right? How many pips were those for someone who was able to get it? Let me go get the crosshair, and assuming we got in at this point, if I try to get that move, then got around 400 pips. Remember, this one is on a daily chart. Okay, so I was talking about the probability or the risk reward. Sorry, the risk reward. Let me go back to the presentation, and I talked about the risk to reward potential of demand and supply zones. And you're looking at the target level as compared to the stop loss level which you're having. So going back to the example which you have here, probably if someone entered at this point here, that's where you entered a trade to buy or long position, and then you had your stop loss, but this one is so big on the daily. But I'm using an example. For example, let's say, for example, you had that enough money and you entered your trade on the daily, right? Remember, this setup can happen even on 1 hour. So I have my stop loss down here. You see, my target area in this case is the topmost level where you're likely to have the next supply zone. So I'm trying to compare between the distance from the entry, this is the entry level. Look at the stop loss level. It's going to be around 200 pips. It's 220 pips, right? And then the target is double, all the way to 400 something. So if someone had some good amount of money and you entered your trades on the daily chart, yeah, I mean, it's a good risk, a good reward to the risk. That's what we're talking about. So in the case where we got a very small move, let's say, for example, our target was as little at this level, and if we were to do, we were just to do holding the same scenario where you have the entry at that level, then have a stop loss at this line which I've placed down here, then if we count the amount of risk as compared to the reward, this is a stop loss of 213 pips and a target of another 260. Well, you have 1:1 risk reward, or slightly more than 1:1 risk reward, but it's not the best. So this one clearly explains the idea of the risk reward potential in the presentation here. And moving to the right, of course, where you have a bigger target as compared to the risk, then that's better. Then as the target reduces, depending with the setup in the market, then of course you're having a weaker supply zone. That's all it means, right? And this one brings me to the end of this session. Let me look at the questions a little bit. Hey, Hashim. And by the way, everyone who has attended this session, thank you so much for taking your time. Remember, this one is to mentor you and help you become a better trader, have as many ways and many approaches of analyzing the market as you're working to be a more profitable trader. So thank you so much, everyone. Let me respond to a few questions here. And Hashim, hey Hashim, you're asking, how do you get directional bias with supply and demand top-down analysis? Good question. So how you get directional bias? Sometimes you want to look at the higher time frames, okay, or wait and see how the market behaves. Like in this case, when you're talking about, in this case here, when you're talking about the rally, then the base and rally, already you have the directional bias that after this consolidation here, the price is trying to take an upward move. Okay, so what we are finding here is an area where you have a probability of getting, this is more of repricing. I don't want to start giving other heavy terms, but once the price pushes in one direction, there is that actually base means the price is pausing, trying to pause, pulls back a little bit before it gets the momentum to keep rising. Yeah. So just look at the market structure like this: rally, base, rally, then the price pulls back again before it resumes the explosive move to the upside. But if you want to have a clear idea of the trend, then go the next time frame higher and you understand the directional bias. Like in this case, it is just very clear that this was an uptrend based on this trend line which I've drawn here. And this one comes out quite clearly. Yeah. Thank you for that good question. P. Matthew, excellent excellent presentation. Thank you so much. Excellent also for taking your time come here. Evelyn Martin, thanks so much for this. Thank you as well. And those are the questions I'm getting on the chat. So without taking much time, guys, I just want to keep it as simple as that. Short and sweet, right? If you like it that way. Thank you so much. See you next time for an additional content that we have prepared for you. Remember, if you want to learn this one with us one-on-one, attend our physical classes. Today I'm speaking with you from Nairobi office, Westlands. Yeah, those are the times we speak when I'm in Nakuru. So come to our physical classes. We can discuss this one more and more. So thank you so much. See you next time. Bye.